Good morning. My name is Syazwana Nabilah binti SAIDIN, and today I'll be presenting the market risk analysis of Maybank Islamic Berhad for the year 2023. We will explore its financial ratios, key findings, concerns, comparison and also recommendations to improve the risk management. For introduction, Maybank Islamic is Malaysia's largest Islamic bank and a major part of the Maybank Group. As of September 2024, it controlled 29.6% of all Islamic assets in Malaysia. Its strong growth is shown by a 13.9% increase in financing to RM287.2 billion and profit before tax rose to 7.1% to RM2.97 billion. Let's now look at the key ratios used to measure market risk. Here are the three main ratios we will analyze. First is interest rate sensitivity gap. Second is net interest margin, NIM. Third is price earning ratio, PER. This helps us to understand the bank's exposure to market changes, profitability and also how the market values the bank. For interest rate sensitivity gap, from the calculation, this 23.29 million ringgit gap shows that the bank has more rate sensitive assets than liabilities. This is good when rates increase, so it earns more. But if rates fall, profit could go down, so the bank must manage this risk actively. Next, for net interest margin NIM, with a NIM of 2.55%, the bank earns 2.555 ringgit in net interest income for every 100 in earning asset. This shows decent profitability, though there's room for improvement to compete with other banks. For price earning ratio, PER, a PE ratio of 1.76 means investors are only paying RM1.76 for every 1 ringgit the bank earns. This is very low. It shows that investor confidence is weak, likely due to a lower profits in 2023. To summarize, the bank benefits from rising rates due to a positive sensitivity gap. Its NIM of 2.55% shows a stable income but could improve. A low PE ratio signals undervaluation and weak investor trust. This gives us a clear picture of market risk and also financial health. There are also a few concerns. First is a small interest rate gap that can still cause volatility. Second is the NIM is slightly lower than industry average. And the third is the low PE ratio that shows that investors are not fully confident in the bank's future performance. Next, to address these issues, the bank should match assets and liabilities more carefully to reduce rate risk. And second, improve transparency to build investor trust. And lastly, enhance pricing strategies and reduce funding costs to boost NIM. For benchmark comparison, BNM doesn't require Islamic Bank to follow fixed interest benchmarks. Maybank Islamic's NIM is slightly below industry average, around 2.1 until 2.4%. PE ratio of 1.76 is far below the group average of 14.9 times and industry average of 10 times. This means the bank is undervalued compared to the peers. Overall, Maybank Islamic has a positive gap and also steady income, but low investor valuations. Higher profit rates help the bank, but falling rates could also hurt earnings. Improving NIM and earnings will be the key to long-term growth. Here are the three main steps that the bank can take. First is manage interest rate risk by aligning rate-sensitive assets and liabilities. Second is diversify income by focusing more on services and digital banking. And third is boost investor confidence through better performance and communication of future plans. In conclusion, Maybank Islamic has a strong fundamentals but also must address investor concerns and also improve profitability to stay competitive. With the right strategies, it can strengthen its position in the Islamic banking sector.